Hi, welcome to this video, which is on the 23rd of January. We're on Thursday. We're just going to be looking at trading Forex pairs in relation to central bank meetings. Now, we did do a preview of the Bank of Canada meeting the other day, which went as expected and gave us a really good profit going short the CAD. Now, today we've had the ECB, and the price action in the euro doesn't look too healthy to us. I personally think the ECB meeting or the press conference, sorry, with Christian Lagarde was a bit of a disaster, actually. I think the euro could really gain traction to the downside. Now, in terms of next week, we have the Bank of England. Now, in terms of the Bank of England, the market is pretty set on the view, or the predominant view is that the UK will probably cut rates. Now we've got PMI data out tomorrow. It's the last big data before the bank meets and will really, in our view, have an influence on their views. Just want to update British pound pairs. We'll also update our view of the Canadian dollar as well. I'm going to go through also a way of altering exposure in pairs at the right time. What I mean by that is a common problem in the markets recently is like you get some profit, it runs quite nicely, then the price action stalls, then it comes back and takes your profit away. How much profit is enough? Now, in terms of this problem, we overcome it by doing partial banks. So we'll gear up at certain times, okay? Then we'll drop the exposure off and leave a smaller position. The logic behind this is, of course, trends can stall, but you want to be in them if they run on as well. I'll try and explain this a little bit more clearly when we get to the charts, which we are going to do right now. But please do keep in mind, it is my view as of right now. It can change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can get live access for a limited period to our member centre on the link beneath this video. Now, it's that time of day where I'm just doing my closing analysis. So I'm just going to use the charts from our member centre. So let's go and take a look at them. And we'll take a look at the euro first of all. All right, Euro USD daily chart. And in terms of the technical action, yeah, did a view at the weekend. We have kind of come down a bit, but it's not a huge move. I'll come to the price action in a moment. The ECB, why are we getting so bearish of the euro? Well, they did leave policy unchanged. Everyone expected that, but I was just kind of bemused by the press conference with Christian Lagarde. They've got this strategy review, okay, where they're going to work out how to recalculate their inflation figures, which is going to take a year, and then they're going to come up with a strategy to help the zone. Okay, that's going to take a year. It's basic economics. Inflation is too low. You don't need to recalculate it. But they're going to. I just found that really odd. And this strategy review is going to take up to a year. The zone will be in recession by then. So what are they doing in the interim? They're just going to stick with the policy they've got now, which is clearly negative the euro, which is negative rates and stimulus. And even worse, it doesn't work. They tried it for many years. It didn't work. They brought it back, obviously, a good few months ago. It's not working. The zone will be in recession before the end of the year. It'll be in recession within a few months, in our view. So the euro, just limited upside and plenty of downside. Now, we are at 110.40, so really only 140 pips from where we entered. But because of the price action in this pair, it's an okay profit. Okay, so I'll bank half. Now, in terms of banking half, yeah, the euro has been stubborn. If she rallies back to the next round number for several resistance, I'll put it back in. Okay, so get a better price, hopefully. My core trade still in. If we don't rally, I'm going to stick an order in at 110.20 and see if she runs down. Okay, I'm only going to miss a few pips if I do the lower sell. The higher sell will obviously get me a better price. Now, in terms of the volatility, historical lows in this pair, but limited upside, you've got a really good carry on euro shorts. Okay, I just think confidence in the zone might start to evaporate. I just don't think the ECB did anything to instill confidence today. They can sort out the problems in Eurozone. So we could see a move up in volatility in this pair, hopefully. Now, if we do, then 109, then you can see my target 104.50. Now, a more interesting pair than Euro USD is EURJPY. Now, in terms of this pair, we did have the Bank of Japan this week, and traders didn't seem too interested in it. For us, it clearly points to the Bank of Japan not increasing stimulus and not cutting rates more negative. Okay, so that puts a kind of floor under the yen, which is already oversold. So yen now, if we look at the euro, it's fallen quite nicely today, and the yen is getting strength from this virus in China, and it's creating a little bit of nervousness, which always helps the yen. Now, in terms of this level here, it's a key monthly level. We don't see that getting taken out. Okay, we've broken a round number decisively here, 122. Now we're through the next round number at 120.78. Now, a couple of hundred pips, take half. Now, in terms of taking half, we've come through the round number, but 120.78, it's like within round number turbulence, which I chat about a lot. Regular viewers will know what I mean. It's like I like it to go through at least 30 pips to be decisive. Okay, so my view is bank half, drop it back in, hopefully at a better price up here, or just come through the low, come through 120.60. That's well outside of round number clearance, and see if she runs. Okay, so that's the way I view this pair, and I think this one's got great long-term potential. Yen, I just feel now just so oversold. You're getting a bit of risk off coming in. Bank of Japan are on a hold. I think they'll eventually reduce their stimulus. They've done that new fiscal package to boost growth. I think the outlook for the yen going forward looks pretty good, and I'm liking the look of this pair. Now, in terms of the euro, if we're bearish of the euro, then we'll always look at euro proxies, because if the euro does go into a big downtrend, then euro correlated pairs can go down quicker. Now, in terms of the video I did at the weekend, we looked at USD PLN, so US dollar against the Polish zloty. Now, in terms of this pair, I really like the look of it. This was basically weekly support down here, move up, get through the 20-day moving average, which I always like if I'm bullish, and we pushed up today. I had a small trade in. I actually dropped another trade in just above resistance, and now we're stalling below that level of resistance. I was thinking it might get taken out. It hasn't, so I'll just take half in. It's not a big profit at all, but I'll just drop it back in the other side of this resistance. And I think, if we do start to run up, stop could be behind this first level. There's plenty of upside in this pair. PLN, Poland, very intertwined with Eurozone, which is doing badly, but also if we get risk off, it's going to sell off hard. It's an emerging market currency for us. So, could see a lot of upside. I think the euro is going up on the PLN as well. If you look at the chart there, it looks pretty attractive. But this proxy, I really like the look of. Risk reward is really good in our view. Now, in terms of what do we got next? Oh, British pound. Now, in terms of the British pound, we do have PMIs tomorrow. Let's find the chart of the British pound. Here we are. In terms of this one, if you are nervous coming in to, not nervous, that's the wrong word, if you're coming into a big news event, and the PMIs tomorrow will be, it's last big data before the Bank of England, again, you can take half off, or if you wanted, you could take all off, okay? Now, in terms of this one, taking half off, we're at 130.40, we're at 131.10. Just doing it as a precaution really. I don't see this 130 level getting taken out. Just come back in on a breakout here. Now, in terms of the PMIs, do I think they are going to be good or bad? My own view is I think they'll be okay. I think they'll be good enough that the Bank of England will not be cutting rates. Now, we've had some other data which is pretty good for the pound as well, which is the Confederation of British Industry saw a huge surge in business confidence. That bodes well for the PMIs. Now, in terms of the services, PMI December. Well, the UK is out getting merry, aren't they? So I think that services PMI could be better than it's expected to be. I think, well, the forecast is 51, it was 50 previous. I don't see a disaster in the services PMI, but again, you can play it safe. But if we get a number that's slightly better than forecast, the breakout would be a good one. Now, GBPUSD is not my favourite of the GBP pairs. I tend to like the crosses and particularly the pound against the commodity currencies. Now, in terms of commodity currencies, I'm just going to go here, which is GBP AUD. Now, in terms of this one, what we've got is, decent move up, and we've kind of stalled today. The tail has hit the breakout point. We're still red. It's a decent profit. What is it? It's 189.20 to 191.76. Was that 250 pips profit, isn't it? Again, take half. Just coming above the highs. If we do fall back, you can key off the support levels. We should get a really good reaction, I think, to the PMIs tomorrow. We'll see, but the pound for us, just so bullish. We really do not think that Bank of England are going to cut rates. The data, since the election uncertainty has been removed, has been okay. And I just don't see them cutting. I've covered this in other videos, so I won't go into too much detail. You can check out the other videos. But I think the odds are Bank of England holding. PMIs could confirm that tomorrow. And sterling hopefully will shoot up and break out to the upside. Looking for a retracement of the whole Brexit decline in all my GBP pairs. Now, in terms of a pair we looked at, which was a really good one, in relation to, I've just got to find it, in relation to the Bank of Canada. I covered, USDCAD as well, but saying in the video, this was the position I really liked the look of. Just to drop in an extra trade because the market just seeing the Bank of Canada as not being dovish. You can check the video out for the reasons why we thought they would be, but they were, and you got a nice surge to the upside. Now on this one here, we tripled up our position. She went up, and then she came back a bit in the morning. Basically take off the extra trades, but we really hammered this one. I know a lot of people in our Facebook group did as well, and most of the people I speak to on Skype. Real high odds trade. Market just so positioned for the Bank of Canada being hawkish, and that didn't transpire. And obviously we're bullish of the GBP on the other side as well. So nice move to the upside. We've stalled now. Now, in terms of, I'm not going to triple size it this time, but I will drop an extra trade back in above today's open. This one of the commodity currencies, we've got all three. I think could have the most upside potential. Looking really for 190. That's longer term, but that's a long way from where we are now. So I'm enthusiastic about this pair. We shall see. But doing partial banks, it does take the pressure off, and you get some money in the bank, and then you can come in. This pair obviously a break above the double top. If she was to come back towards this support level here, key off that level, maybe get in at a better price. We shall see. There's one pair I want to finish up with, which is CHFJPY. Right, last pair, CHFJPY daily. Now, in terms of this pair, did an individual video on this one in terms of when we did the trade entry. I really liked it due to the central banks. Again, now, obviously, in terms of Bank of Japan, we think their view is bullish for the yen going forward. But what I quite liked about this one was we come up here quite strongly. That's to do with the Swiss central bank being accused of being a currency manipulator by the US. So specs cover shorts and go longs, assuming the Swiss central bank will now have to let the Swiss franc rise because the US have told them they're a manipulator. Our view was Swiss bank, central bank, take no notice. They actually released a statement that said they weren't a currency manipulator. Of course they are. And that made no difference to them, basically. And you saw the Swiss franc ease back. Now, it's not a big move, is it? It's only 113.80 to 112.80, just 100 pips. But it's an entry I really like because it gets above a round number, just come back through the round number, and now we're coming to support the 20-day moving average. Did a really sizable trade on this one, similar to GBPUSD. I can take it away, the bulk of it, 70% of it. And then I will put another trade back in, but not as big as before if we break down here. And now I'm looking for a rundown to chart lows. But the risk reward was just so good, in our view, when it failed to move away from the 114 level, just worth hitting with big size. So it's not about the amount of pips, it's the size you've got on a lot of the time, isn't it? So that sort of entry we really like. And in GBPAUD as well, just gearing up, through a level and just looking for immediate follow through. Okay, another good way of trading, but you always like varying the position size. So I can stay with big moves, but I'm covered a bit if obviously prices rebound. Actually, we did go back up to 114. I'd look to sell up there, so on a break lower or a move up to resistance. I think I just like doing partial banks, and this week has been an okay week in terms of a little bit more lively. I think tomorrow could be a lively day. Be interested to see those PMIs at the UK. Also see if the euro can follow on to the downside. I will do a video at the weekend if anything exciting happens. But that's the video for today. Thanks for watching us as per usual. Take care. Have a good day.